Hi, Tim Bigham back again. After a little winter breakdown in sunny Florida, back to cold Chicago for Traders Exclusive. And the market a little bit cold today after two very hot days coming into here. S&P's breaking out to all-time highs yesterday, giving back a little today based on some somewhat bad news coming out of the banking side. The bank certainly led the way yesterday, but Citigroup putting a little coolness on the party here today. But generally we see the market just kind of chopping around here, and I think that will probably be the theme going forward as the Bernanke put has become the Yellen collar, with both the upside and the downside probably somewhat muted here. The market trading at over 17 times earnings, which certainly is not cheap. Anything up around 18 gets to be pretty pricey. You can certainly use the 10-year yield at 3% to kind of build an excuse for a multiple expansion, but going forward I think it'll be difficult to have that multiple expansion like we saw last year, where the market rallied over 30% with earnings growing barely at all. So I think this will be a year of more stock pickers and more of a big range, no change, with the market kind of shooting up and down. And certainly we haven't had any kind of pullback for a very long time, which the longer that goes will become a little more disconcerting. So some names I'm looking at playing from a, I guess, non-bullish perspective are some of the stocks that have led the charge. Amazon, which broke up to 405 last week, back down below 400. I'm selling out of the money call spreads with 410, 415, using the weeklies all the way out till February regular monthly expirations. Just positioning for Amazon, really not to have a big pullback from here. It's trading about 396 last I looked, but not to break out the new highs above that 405 level. Another name I'm looking at is Twitter. That stock hit 72 about a week and a half ago, pulled back sharply, trading in the low 60s here. So I'm looking at that 70, 72 strike again, using a strip on the weeklies out to February, positioning again for the stock not really to break out to all-time highs. I think we have seen the highs on those two stocks. And the third one is everyone's recent favorite, which is Tesla. Again, that stock, broke through 170 yesterday, pulled back sharply, closed down around 163. Today it's up a little bit, but I'm looking at that 180, 185 call spread again as a strip, and with the high implied vols there, I can get further out of the money to capture similar premium. So really looking for Tesla not to break out again significantly to new highs. They did come out with 900 more cars than expected sold, which gave about 2.6 billion increase in market cap. So you can do the math there on what 900 cars are worth to Tesla. To me, the stock was rich before, and the fact that it did beat by a little bit gives me even more pause for concern. So until next time, this is Tim Bigham. I think this market will be stuck here. Start looking for stocks to pick, get your laundry list ready, and as always, keep your position sizes accordingly and your stops in place. Take care.